two, three, four trades. Okay, it's good that I didn't get all my results there, not recorded. So, so I don't know. Anyway, we're just getting to so wobble. And then Friday I said that the words I used, the phrase I used was I went off the rails on Friday, um, and ended up at like a minus 2R, which thanks to Jeff who gave me some feedback. He said, look, minus R, just a normal trading day's results in, for him. Um, I think it's not so much the the result. It was the way I went about it. I was over trading, 33 trades as I share this all from memory now. I went minus 2R down. I got to stop that bad habit for a start, and then spend the rest of the day, 29 trades, I think, getting net zero. I probably would have better off just stopped and gone fishing or done something. So so that was the week, and I had some histogram and all that to look at it. Um, I think somewhere along the line, obviously, I lost the calmness, uh, and was probably over trading, chasing, trying to achieve something, which I'm still trying to work out what it was, um, on there. So that was what I was working on. I was trying to update some histogram. Actually, if you don't mind, I'll just share it because it's easier to.
Sorry, I accidentally muted you, Ken.
Okay, no worries.
There we
Okay,
go.
I was wondering whether I've been on mute and
I hit
and
the wrong
you're,
button. I
you're
was
just.
trying. Yeah, I hit the wrong button trying to allow for share of screen, and then anyway,
I think it's that one. Let me just try that. You seeing some histogram, or
there we are.
can you actually see? Can you see anything? I can't see
Yep,
anything.
got it.
Okay,
Yeah.
okay, right, okay. Um, where was I? So I think one of the things I kind of struck me while I was looking at my results, was how this 47 here of the basically from 0 to minus 0.5. So those little small things, and of course the 0 to plus 0.5. And I said to the guys yesterday, without having actually looked at it more, is that if I cut those down, I think my R's would probably go up. And this morning, as I came into foundations and you're talking about that, I thought maybe I'll have a look at it while I have the time. And actually, if I cut all of those out, the 47 and the 36, there's minus 7R in there. So, okay, I can't cut it all out. Maybe if I cut half of it, half of both of those, maybe I'll get to minus 3 point, I'll have 3.5R back without additional work, I guess. I'm trying to be doing less work. So that's an insight for me to work on that. And that's one of the things I was going to work on, just to kind of scale back on the trading and jumping in, like, and like any symbol and any kind of pattern.
Let me also suggest instead of eliminating those, which would mean a significant change to your rule set, how do I make a 0.25R improvement on those? Because that's 80. That's 80 trades.
Oh yeah, okay,
If on half of them, if on a quarter of them,
yeah,
if on a quarter of those trades, I could make a 0.25R improvement. So a quarter of 20 is 5. So you could get 5 of your 7R back. Only if you could make a 0.25R improvement on only 25% of that set, you've solved your problem rather than A complete
Right.
re-engineer, because remember, every big trade of success that you had started with the rule set that got you to the scratch trades.
Mhm.
So if you say to yourself, well, I'll just eliminate the scratch trades, yeah, but then how do I get to the trades that still work? Then you got to investigate. Now you're really radically
Okay.
changing.
Yeah.
So if all I can do is eliminate waste and shift the histogram to the right a quarter of an R, so if you could do it only on 25% of them, which is
Mhm.
probably eliminating errors or
Yeah.
taking micro improvements. Hey, what if you could do it on half? Then you'd have 10R, and that's better than trying to find a new way to magic up a 10R win. You double your performance. If on half the trades you got a quarter of an R improvement. I would like you to think about that instead of finding reasons not to take the other trades, but look for ways in which micro improvements could save a wedge. Those are just, if your average win was zero point 0.4, you know, taking a 0.25 improvement is like half
Mm.
of that. If I just get one little sliver on each little piece, you'll move that whole histogram to the right. What that would do is if you took a look at your cumulative R and just raised it up a quarter of an R, that's what your equity curve would look like. And so it's the same pattern, but you're raising it above the zero line. You're putting a shim in and blocking and bracing and with micro imprint by solidifying your foundations, improving the
Mhm.
foundations of your trading, if I can say it that way. So go ahead, carry on.
No, thanks for that, Ken. That's worth whatever it is, less than the time. The
Yeah,
whole attendance just right there, and
you're
plus the
also correct. You are correct about that too.
yes. Um, well, that's it really. I was just looking at that and doing that. So thanks for that. It's awesome. I'll definitely take a look at that. Let me just stop the
That
share.
really strongly connects, by the way, that strongly connects to the final discussion from the foundations where I was talking about the difference between industrial trading and magical trading. Magical trading is what we do when we don't know fully all the reasons why we did what we did and got what we got. I'm not saying it's just we just don't know. Arthur C. Clarke used to say that, the science fiction writer, that magic is simply a sufficiently highly advanced technology that you can't explain. So it looks like magic. So we had and the reason that's in my mind is we had a magician that was here this weekend with Mark Matthews, who's my research partner from Ohio State on creativity and true storytelling. He's one of Angus Fletcher's grad students, and I'm helping with his project. So we hired him to come and teach the Army a little bit about creativity and true storytelling because they'll believe him when they won't believe me. Because an expert is somebody that's 200 miles away that you paid money for. So there's skin in the game there. So and his presentation partner is a magician, and he was showing magic tricks that got everybody fascinated. And then when he unpacked the trick, we could then see, oh, you can actually make transformative changes. And when you realize how easy the trick is to understand once you know it, then it's just due diligence to learn how to do it. He has one where he makes a coin, he drops a coin from one hand into the other hand. Gravity works, and then he makes the coin jump from his hand, bottom hand, to the top hand, and goes through a. Well, here's the secret. I was using powerful magnets. Here, you try it. And everybody said, "Oh, now I understand." And then they pick up it was just two quarters. It wasn't. But they're not magnets at all. Oh, now what? And that really blows their mind a second time when they had the comfort of knowing and then they didn't know. Oh
Yeah.
my goodness. And that kind of public shifting makes you realize that your whole worldview can change. And then once you understand the process, all it is called the muscle pass, where he's trained his hand to be able to flex and makes the coin pop with the power of the muscle of his hand. But it takes some skill to do that and a lot of practice. And now suddenly what looks like magic is understandable. And then you realize, oh, by just shifting one element of our frame of mind or a frame of reference, then you can make transformative changes quickly. And that's the so the story of that is connected to true storytelling. That once we understand where our stories come from and how we constructed them to make sense of the world, that by making small changes in our stories, we make profound differences in our understandings of ourself and the universe. So, as an example, the small shift in how to think about the middle of that histogram, instead of eliminating it, just make nudging it to the right with attention to detail and performance. Now, instead of trying to investigate the deep magical reasons why some of the trades worked and the other ones didn't, they worked because of reasons we don't even need to know. Just the other market participants showed up and they came in with money and it just kept going. That's why. Well, how could I predict that? You can't predict that. You can only be in the trade and managing the downside. So rather than looking for magical reasons to create new systems that only get the biggest winning trades, I can now pull back the curtain and get into the workshop and do due diligence to find the micro improvements, which is the same as a magician learning to train his hand to do the muscle pass. So that was one of the powerful reasons we brought Mark and Donovan out to the Army to help our faculty see that it's the little shifts that we make in the classroom as teachers which make the most profound changes in our students. Not the magical insight of, the special knowledge. No, no. It's the due diligence with foundational principles. And so that's what I hope for you to take from this little discussion when you start looking at the specific trades in that data set. Now, if you could look on my desk and help me find my little. Yes, we're in the middle of a home deconstruction project. So if you hear an impact wrench and an impact driver in the back, it's my brother. We figured out we could actually save the beautiful oak handmade cabinetry, move it away from the wall that was leaking, and we found a place to repurpose it in the house, which means we had to move 20 wall feet of other junk that I've accumulated. So a complete shifting of everything in the house. But if you hear the sounds of machinery in the background, it's my brother doing that work. So aho. Here we go. Ernie.
Good morning again. I'm not going to be able to do justice to this. I've really been working on this all night long, and I've really cut it down. So I'm going to make it so at least it'll be brief. It won't be good, but it won't be long. Um, the lesson talks about building an inner library of characters in your brain, um, and you can think about what you can do, what you think about with these characters. You wonder what this character would do now. How would she respond to the situation you're in? And so the first key is to make the characters psychologically diverse. The second key is to make them fast to access. So to do that, we have to identify the root why. What makes these characters special? What makes them unique? And what distinguishes their minds from other smart minds? So for me, my mind characters, like Edna St. Vincent Millay, they have the ability to express their talent. they can put words together to describe the beauty of the things that they see or hear, and they can make me see or hear something that I didn't even know existed. And not only that, but they can touch my soul. I can feel the tranquility. I see beauty in the grouping of words. A musician can put a melody together that stirs something within me. An artist mixes colors together to create an image that stirs an emotion within me. Years ago, um, I busted my butt creating a spreadsheet, financial report from the PC. This was like in the late 80s. We always use mainframes and these Hollerith cards to do a program. Um, the spreadsheet that I created gave more control to the department. They could do this financial report whenever they wanted. They could do it by week. They could do it by month, by year. I was really proud of that report. Well, if I could, I would have framed it. For me, that spreadsheet was a work of art, and so I was just, I was just so happy with it. Well, nobody really cared. And as a matter of fact, the departments were more upset with me because it was like, you want us to do the report? What if we do it? Who needs you? So anyway, I really got shot down with that. And I kind of feel like a frustrated artist. Do I really have the talent? Does anybody appreciate my talent? And am I wasting my time? Yeah, I feel like I've got something inside of me. I want to express it, but I don't know how. And I can't get it out. So, and I'm wondering, are my investments a work of art? Yeah, kind of. I can put together supported spring crossings, PSARs, MACTs, and with my brush. My canvas is my trading platform. So I don't know if it's pretty or not, but Picasso was considered an artist. So there's hope for me. And so I enjoyed the lesson. And I don't know if you guys feel like what you do is artistic or not. I know that I'm not really, I'm really learning a lot from you. Naturally, Ken, you've really been fantastic. And so I I don't know that I'll be as good as these guys, but as good as what you're going to be able to do. But at least my gallery is going to be my bank account, so I'll look at those things and each month when I get that, and hopefully I'm going to be happy with that. And so it's a lot of work what we do, and I get very frustrated, and I'm wondering if I'm wasting my time. But every now and then something happens that makes me feel like it's coming together. The colors are there, the words, maybe it's not really great literature, but it did get out there. So i I appreciate um, all the help that you guys have been. Aho.
You know what I want to say on that is just share my story that I think maybe this year more than ever I learned the idea that the universe is large enough to figure out what to do with the work you create. That's its job. It actually doesn't need you to help figure that out. Or you worrying about the universe properly doing its job, is that really necessary? Is your worry about the universe helping the universe do that at all? No, no, not really. Your only job is really to do the best you can on the most important thing with the right intention, and then offer that gift to the universe, and then trust the universe to find the right place for it. And then you can simply enjoy your connection to the universe, which loves you. And your act of creation is for your satisfaction, to document your insight, to create an artifact that reflects how you think and feel in this moment about everything around you. And if you're expressing that inner love, then that will infuse the work that you do. And the skill of expressing that is something else. It's simply whatever that was. It's like I learned from Bill Scheidt that you cannot play the drums wrong. If you're expressing what you hear of your inner rhythm, then what you played was perfect in that moment. That's what Mike Three Bears means by surrendering to exactly what is. Acknowledging, being aware of it, acknowledging it, and accepting that it is exactly as it is. Surrendering. And so your act of creation, whatever it is, that was your job. And then you empty your bowl by taking that creation and offering it freely to the world, the universe, the Great Spirit, and trust the Great Spirit to store it and put it in the right place, like so many soap bubbles or, you know, dandelion seeds flowing around. They'll find where they're supposed to be. They'll end up where they are. They don't even have to, supposed to be anywhere. Means like there's a grand. It doesn't have to be a grand design. Wherever the winds of change blow, those acts of creation is what happened. And so part of surrendering is realizing that when you offer it to the world, it goes wherever in the world that it will. So awareness, acceptance, you know, and then you can just be who you are. Your job is to create that unique thing that only you could do from that place in time. Only you could do what you just did. And the universe will figure the rest of it out. So not worrying about the rest of it helps you get back to work sooner, you know. Or worry about it. That's fine. Accept what that is, that's what the feeling was. You know? Yeah, but when I learned to just do my best and offer it freely, and what I learned was to really not give an F about what other people thought. That when you're not going to worry about it, it's really important to not worry about it. Well, I'm not going to worry about what she says, and then you think, well, what is she going to say so that I can not worry about it and pay attention? No. How many heartbeats of the 3 billion that you've been allotted are you going to spend worrying about that? And did that accomplish anything other than it got between you and doing your best work? So figure out how to generate. Well, you didn't have to figure out how to generate the energy of worry. That's a gift to you from your inner guide, in the same way that fear and joy are. All of those emotions are your insides generating energy in some form, some flavor, for you to do something with it if you will. So accept the worry for what it is, and then figure out how to convert that into doing better work or moving to the next thing. The longer you stay in the emotion, that's the work that you're doing. If you just stay in there and wallow in the worry until you're done worrying about it, that's what you did with it, is that you sat in it and experienced it. If that's what you did, be aware of it, accept it, and acknowledge it. You did that work. So how many times, is that what you want to be an expert in? Do you want to be better at staying there more often? Or do you want to be the person that takes that worry and creates an artifact? That's why writers write and sculptors sculpt, is to express those inner emotions externally in an artifact and gift it to the world. Was Picasso objectively a great artist? No, because being a great artist simply means that at some moment in time, a lot of people resonated with the work that he did. He didn't create that feeling in them. The feeling was in them, and they made the meaning of his art. There's some evidence that shows artists are at the front end of the time that is becoming. And they and that 10 years earlier or 10 years later they were too soon and nobody understood them, and 10 years later it was too late, the world has passed it by. So their great art is made by the intersection of a unique artifact and the time and all the people who reacted to it, plus their socialization of it. All of those ingredients go into us corporately deciding what is great art or not. And since you can't know what that is until the artifact triggers those feelings, you can't even anticipate what that is going to be. You might get an idea of it or an inspiration of it. You think about advertisers in some sense making little tactical pieces of art. They're interesting, trivial insights into the state of, you know, the zeitgeist. And in that sense, it's an act of creation, and they're doing their best, and they're like making little micro miniatures of ships inside bottles, or making, inscribing paintings on the head of a pin or something. I don't know, but my point is, create the artifact, offer the artifact to the world, keep it in your workshop, and remember exactly the courage and the intention of the person who made that at that moment, and give them honor and respect for the work that they did and had the courage to offer that to the world. Then, as industrial engineers, we can work on the trading artifacts to detect improvements along the way. But yeah, that's what I wanted to say about that. So that was my aha moment for this week's work in progress. We'll see you, Ken. 陈浪。
Okay, on my notes. My word of last week is the imperfection. Just a reminder to myself, I cannot do everything perfect, not even try to be perfect. Last week I took 93 treat, both 30 minutes and 5 minutes setups. Get a net 8.7 hour for the week. Only one treat with larger than -1 hour loss. That's not a mistake, just because the bad field both in the entry and the exit actually is a PPW. That's the spread is really large. So even I said the stop at the 1 hour feel, worse than 1 hour. That's it. I think that's a little bit achievement in my tweet last week. I would say the good thing I did is the quickly cut my loss or even raise my stop to no lose plus dinner for 2. There's a lot of around 0 R trades, so that give me a way. If I have 2 or 3 good trade, that's increase my net R to the plus side. Also improved my routines work. I feel more comfortable to take the collapsed dragon and a piece of leaf. What I did is I just framed the trade, put order stop, buy order, buy stop or sell stop, or just wait that order to trigger. That's also the reason I take 93 trade, because sometimes all of the orders trigger, so I have to jump in, to decide which one I cut quick, which one I let run. So in general, I feel better about my trading process. So not only about the positive R, also about the process. But the other thing is I never take a trade on the 1 minute and 3 minutes. That's good. But still take a lot of trade on the 5 minutes. That's make me think probably I have trick my brain in the other way. Probably I should look at the 1 hour chart or 2 hour chart. Then 30 minutes make me think that's fast. That's just a thought how to improve next. Today's lessons, make me thinking, how do I build up my library of perspectives, especially those good coaches, trading coach. I think about Ken. How do I, hack into his mind? I think the only way is by repetition. I mean, watch the videos with the podcast with all those teachings again and again. That way I can build up my library. Otherwise, how do I know? I think what the way he think is actually still my way of thinking. So my conclusion is, to build up my library, I need to repeat watching all those good videos, all those, podcasts. The other coach I think about, is Dr. Wan Sarp, have attended so many workshops, have all those teachings in my computer. I should review them again if I have time. Other perspectives actually from all those school traders in this group and the foundation group and the daily podcast, how they trade, how they get the result. That's the lesson I get from today's perspective, personalist, all those stuff. Move on to the figures exercise, the poem Renaissance. I put more time onto that poem last night and this morning, just think about that. I think the person get a moment of enlightenment. At the beginning, the ego is so big, just want to touch the sky. Then the ego collapsed to death. Then the ego, revived. When the ego understand, there's a God is bigger than the ego. The poem also remind me about the Buddha's teaching. There's, in Chinese culture, there's a female goddess. We call her Guan Yin. Her name actually meaning hear all the cry. Hear all the cry of suffering. That's resonate with the poem, when there's a cry of suffering, the God just heard about that. the compassion come out, then the person revived, and she said, I breathed my soul back into me. That means, the higher self, the God, the goddess come back to the body, make a new person. The radiant identity, the new things. I really like the poem. So last year, the last time I did the lesson, I said that poem is actually a trader's journey, how the ego come out, believe in the trade, don't want cut loss, then you get lost. Once we get rid of the ego, especially get rid of the directional bias, get rid of the idea, I know what will happen, and then just follow, the price action, do the routine work as it should be, then the trade become the trade, winner or loser. Just that's it. I also remember last time I really get emotional about what I'm talking about. Probably I get more calm feeling about that point, about that idea reverse, the poet said, a grave is such a quiet place. That's a good sign of enlightenment. And she also said, oh God, I cried, give me new birth. That is everybody should do, moment of moment. Let the ego die and get one with God, get one with the sword, do the battle drill, That's the trick. That's my understanding of the course. I hope.
Jeff.
Yeah, I thought I'd go last today since I kind of hijacked you guys' session last time and just rushed in front of everybody. Sorry about that. So this lesson 22 impersonator, kind of the impression that I took away is the two things I wrote down was imagination and perspective, and maybe combining those two things continuously as you move from the present into the future. The poem, I liked it. Actually, in the beginning, I didn't like it because I was a quarter of the way through and I'm thinking, this isn't a poem. It's too long. Poems shouldn't be this long. Well, that's just my opinion. I mean, it's as long as it is, right? So then I thought, you know what? This is either a very long poem or a very short novel because it's an epic journey, and those two perspectives are kind of interesting. And then I realized that the poetry expert takes 3 pages of words to describe what she believes the poem means. And that actually kind of rubbed me quite wrong. I thought, I didn't need to know all that. So I wrote, this is what I think the poem means to me. This is what I took away from it. And I absolutely liked it. I read it probably 10 times. I listened to a couple of different people read it. They read it in different ways. But here's my summary of the poem. This is the idea of an epic journey that begins like a daydream, travels through all of space and time, experiencing and feeling all that is and ever was, eventually returning to the starting point with new experience, knowledge, and perspective to discover a vast appreciation for all things just as they are. That's my summary. Took less than 3 pages. And it reminded me a lot of the hero's journey that Joseph Campbell kind of popularized, which, just like Chen Long said, you know, it's the birth of the ego, and then the death of the ego, and then the rebirth. And the one word or the one phrase that stood out above all others was fearful pawn, because the market can certainly make me feel at times like a fearful pawn. The exercises, exercise 1, I just decided, you know, I'm playing a game of trading against myself. So if you guys will let me share my screen, I'll just kind of show you what that game looks like. I can remember how to do this. Yeah. Can you guys see my presentation here? So there were some comments in the beginning about my little monkey avatar up here. And so I just want to talk about that first. I couldn't pass this up because this is a left-handed monkey, just like me. And Greg pointed out, hey, he's on the wrong knee and he's doing it wrong. And yeah, exactly. I'm an imperfect little monkey myself, and I'm left-handed. So this has become my new avatar because it just fits. Over the past 3 weeks, I've made peace with my mobile trading woes. I'm not a perfect expert by any means, but all of the stress and anxiety of using mobile devices is gone. I still make a mistake now and again, but I just don't let it bother me because it's just the way it is. I will admit to staging this photo. My son took it for me, and I cleared all the clutter off my desk. But even the clutter, it all goes in that brown bag. So that's that. Last week, Ken, let me see if I can make this better for myself to see. There we go. So last week, Ken, or week before last, maybe, I don't remember, where time's kind of all scrunching together for me, but Ken had recommended that I put a column in my trading journal to track these Uwe exits. So I did that, and anything that populates in this column where you see in the green column means that that was a multi-exit trade. So that's been really great. The red column is actually not working. It's supposed to count sequentially up the number of days I'm trading, but you can see it's confused. So I got to go look at the code in that column. I've been using Snagit, getting better. You know, 3 months, I didn't know what an artifact was, and now I think I'm actually creating some. So there's always more work to do. This has been one of my big projects for the past 3 weeks. When I realized the errors that I was making, my first response was to eliminate all errors. And the first week I traded error free, but it took all the joy out of it, and it was unsustainable because that's the standard of perfection, which is unobtainable for any length of time. So thankfully, I recognized that after just 7 days, and I accepted the fact that I will make errors, and I'm fine with making errors because that's how I learn. I just want to know what they are and how much they cost. So the second week is in the green box, and I made 2 errors that cost 1.08 or 1.1 R. And then the third week of trading is in the lower white box here. And again, 2 errors, well, minus 1.2 R, and I'm fine with that. My idea is that just by accepting the fact that I'll make them, and the awareness of the mistakes themselves will lead to fewer mistakes, and I'll find out by tracking and analyzing my progress. And the other thing that came out of this was I have to be really careful when I classify something as an error, because when you take a trade and it doesn't work out, it falls out of favor with me. You know, I think I don't like that trade. I shouldn't have taken that trade, whatever. But when I go back and do my assessment, I look at it as objectively and critically as I can. And then this is my last test. Before it gets into the error category, I ask myself, was this trade mindfully executed with intention and within the rule set? If yes, then it's not an error. It's just a trade that didn't work. If no, then it's an error and we need to study why that error occurred and we need to log it into this sheet and take notes and track it. But it's real easy for me to take a losing trade and say, oh, that was just an error. I shouldn't have taken it. So Ken also suggested that I track each exit. I'm doing the Uwe exit strategy. And he said, track each exit as one trade. And so I did that. And so that means that one entry may have 2 exits. And it's pretty amazing, the results of just this past week. Brought the expectancy up to this is all the trades for the month of July. Brought the expectancy up to 0.76. It increases your win rate because you're logging 2 winning trades instead of 1. And the payout rate just goes through the roof. So this is what happened. The stats when I started logging that, and it shows the R capture very high. And for some, I just noticed I have another table here that's not working because this says there was a trade less than 1 R, but there's not. The max loss was 1 R, so that doesn't look like that's working. But anyway, the Uwe exit is working extremely well for me. I never scaled out of trades before, but because I have constraints on the time I can trade in the morning to just about exactly 1 hour, and then I have to go to work, it's allowing me to leave a piece on. And I find out that I don't really care about that piece. Wherever my stop is, it's going to be above 0, so 0.3 or higher. And then I just go to work and I look at it when I'm able to. And if I'm not able to, I just don't look at it, So the cognitive load is almost nothing. And I'm interested in it. If I have any time, I want to look at it, see how it's doing, but I really don't worry about it at all.
Hey, before we leave that screen, just to acknowledge, you have a 2-to-1 coin flip and a 2.5-to-1 payoff.
Right.
I mean, yeah. The other thing I want to say too, this is a good problem to have, but as you start thinking about errors, think about those overrides where you made a decision and it didn't result in a loss.
Right.
Notice that the way you've got that set is the mistakes are the only ones where you used judgment and it didn't pay off. What about ones where you used discretion and it paid off? Should we think of, and I don't want an answer right now, but should we think about those as errors, or should we just simply acknowledge this time my judgment paid off? And now what you really want to be thinking about is that your trader quality number includes not just the deviations or the judgment that resulted in a loss, but also the judgment that resulted in a gain. And that really, the difference between a pure mechanical implementation of your rules and the net result you got, the aggregate of that is your trader quality number. And the way I look at that is that the imperfection of the woodworker, who is nevertheless a master of his craft, is that he acknowledges his own potential, the consequences of the judgment he's about to make. And so he safe sides that a little bit and deliberately is making what's going to be scrap wood, which we're going to learn later is simply wood that hasn't found its purpose yet. It was not wasted. It's just wood that I haven't used for any other purpose. Eventually, we're going to put all that in a grinder and make plywood out of it, so it's not wasted. Or I may be able to use it as a shim or a filler or a brace or whatever. So as we start thinking about errors, we can start to de-emotionalize them and just realize that some of them are that they are simply the results of in the moment overrides of mechanical rules, and that your net of those is your trader quality number, and that the negative ones look at the cost of that. But if the cost was 2, but the positive override was a +8, that's a 4-to-1 payoff of using your trader quality judgment. And that will get you out of the excessive pursuit of eliminating smaller and smaller errors and into an appreciation of what the judgment in the moment is actually giving you. And so, in the world of entrepreneurial thinking, the big wins come from taking the risk and getting the great follow through, not from the premature search for perfection in what is essentially a scramble to create value anyway. So that's how I want you to start thinking about errors and trader quality number, and not just the cost of perfection. The cost of making the error has to be weighed against the cost of opportunity lost by not following the trader quality number intuition. So just give that some
Right.
thought. Yeah. Carry on.
Yeah, great point. I've actually been thinking about that, and I haven't. I don't have a systematic way to address the other side of it, but you'll see it on the following slides.
Yeah. Here, let me interrupt and say, here's the systematic way of doing that. Is when you have your mechanical rules fully coded, you just run them, and the robot number is the baseline against which your discretion is measured. The ones below
Right.
the line, the underperformance trade by trade, is the cost of judgment. The
Right.
numbers above the line are the rewards of judgment. The integration of them is trader quality number.
Right. Perfect.
That's how you do that. Carry on.
Great. Yeah, that's another work in progress for me in the future, but that's a lot of good material there. So thanks.
Hey, let me explain why that's important, because we actually did that at the Tharp Institute, where we had fully mechanically coded the frog system. And we took a set of 50 known trades, and we perfectly executed them according to a variety of frog rule sets. So we knew what perfect implementation would be. And then we ran the students through a simulation of those where they saw what you would see and they made their decisions. And in the first set, they were trying to perfectly execute the frog rule. And then we compared what they got against what the frog system produced. And every place where their number was different was a potential for misunderstanding or misexecution, just skill, or it was misunderstanding. And then that allowed us to clarify the rule set through use. Then, after 50 trades, we asked them to notice those moments when you wanted to override the rules and do something else. And just notice those, but don't follow through. And then look at the results of what would have happened if you'd follow it, and then check your feelings. So they did that. So they learned how to journal and analyze and develop a coach's eye. Then the third iteration was, now you are free to trade your rule set with modifications based on your insights. So take your insights and turn that into a new trading system, a modified frog of your choice. Explain those rules to your accountability partner, who's going to notice and journal if you followed your own modified rules. So then we took a look at those results, and then we compared their results against the perfectly executed frog mechanical rules. And what we discovered was that there were a lot of people whose discretion was much worse than the frog, and there were a lot of guys whose discretion was much better than the frog. And there were guys who were unable to follow their own rules as modified because they had the modified rules and they were committed to doing it. But then in the moment, the impulse to do something else was stronger than their willingness to follow their modified rules. So we learned who the truly impulsive traders were. And it was a coin flip on those guys. The people who had modified rules and were following their impulses had the widest difference in performance. The guys who were able to follow their modified rules strictly 2 out of 3 times improved the frog. 1 time out of 3 really underperformed. So there was some fascinating insights into there about the psychology of trading mechanical rules, the psychology of modifying the rules, and then the psychology of following your modified rules. It takes a lot more discipline to stick to your modifications, but that's really the mark of a scientist and an engineer who can change one rule set and then actually faithfully follow through. But the guys who were able to add that to their trading process turned out to be the long-term most successful traders of any style, day or swing, because they had internalized the coaching eye and the analyst's eye and were able to successfully place a wedge in between the trading part and the impulse to act part, the monkey part, that they were able to look at that as a meta system and have very strong mindfulness about what they were supposed to be doing, what they had committed to doing in that moment. The guys who were able to discipline themselves were the ones who, even with the modified rule set, were able to still notice the new impulses, document them, but not act on them until they could fully see what their modified rules would do. That was a really big breakthrough and insight from those people. We did 3 workshops like that, and boy, it was hard Army work to do that. But the insights on a large data set of over 100 traders, invaluable. So you're on the path to doing that with the way you're creating the artifacts, studying the rule sets, making the adjustments. And that's what you will see in Hamad's work from the foundations session from earlier today, in which he has learned to detach from the trading part in order to develop the coaching eye. Aho.
Well, I'm going to have to go back to listen to the replay on that. Thank you very much. So I realized when Ken said track all the exits and then we'll figure out how to position size it later, that I was going to have a future decision coming up of how to position size it. So I decided to track it both ways. So this is tracking each trade entry as one data point and averaging the exits. So if I had 2 exits, I take both exits, average them together, and put them into the spreadsheet. The interesting thing is that scaling out is good both ways. It's actually beginning to populate the right side of the histogram, whereas before, during this middle section here, where I was really focusing on -1 to +2R, I was cutting those winners short and not getting any trades, any large winning trades much. But with the scaling out, so far I like it. I'm going to keep doing it for 2 reasons. It fits my work trading life now, and it's really low cognitive load.
Yeah, so let me point out the efficiency of letting your day shift and night shift manager just handle the trades until it becomes abnormal good. And then and only then invoking the sniper so that he's refreshed and now he's taking the good shot on something that's already an abnormally large trade. So it let it grow into a great one, and then you don't burn out with excessive cognitive load on routine making hamburgers. But every once in a while you get a good one. Now you bring in the sniper to handle the exceptional case, and then the the payoff of retaining abnormal gains is amazing, and you're very sharp on that game. And now when you set alerts, you can do that systematically to bring in the sniper only as needed. Hey, wake me up if it's important. And then you set the criteria for what's the, we call that in the Army and in command post operations, where you're looking at, hey, I got to be great every night for a year, but I need my sleep. So establishing the wake up criteria in order to get the best decision is crucial. So that's essentially what you're showing here, is why the excessive pursuit of perfection to minimize the losses comes at an opportunity cost of missing the great big wins on the other end, which is where that's where the opportunity cost is greater than the cost of errors avoided. That's entrepreneurial thinking, and that's also part of industrial thinking, because we recognize R&D and pilot programs and scalability. Now, how quickly can I scale the insights into new systems and new rule sets? Back over to you.
Okay, great. Yeah. I showed you the data a couple of weeks ago, but I'd never showed any screenshots. So I went back to the first week of July and picked out when I very first started doing these Uwe exits. This trade was executed just in the normal way, the FSC, and it just was working really well. But at 1 o'clock in the afternoon, I had to make a quick decision to either cut this trade or just leave it alone. And so I decided to take half off and knew the market was going to close before I could look at it again. So the market closed well, and the next morning there was a big gap up, and at just before 8 a.m. my time, I took 4.8R on the second position. Felt really awesome about that, and went to work and did what I needed to do. And then I see that, if I had just done nothing and stayed in that trade, it would have been a much better result. And there's no way I can ever get these re-entries normally because it's during my work day. So that this led me toward the idea of, take the best shot I can on the first half of my position and then just do my best. I won't be able to mimic the Bollinger Band 30 perfectly, but do my best to take an Uwe exit on the second half, allowing for greater returns from the second leg up or a swing trade. This trade was happening at the exact same time, so it was managed the exact same way. The only difference is this one gapped up and started failing immediately, so I just cut it because I didn't want it to get worse than it was when I cut it yesterday, and that allowed me to manage the first trade that I showed you.
One of the ways to think about that is that the sniper exit, which gives you the larger win right away, now pays for the 1R risk of the managerial trade that's going forward. So you have not only captured a larger win, but you reduce the risk to your core portfolio, because now the risk that's being taken is from markets money from the sniper's exit and not from your original core capital. Over.
Right. That's a great point, because I've realized in review that what felt so good in the moment, and this is an example of one that would have worked, is it feels like a genius to take two positions off, one at 1.6 and one at 4.8, until you realize that sniper exit cost you all the rest of this. So that's a good point, and you'll see further slides. So this one would not have worked if I had had a looser stop on it. It came completely through the Bollinger Band 30, the Dragon, flipped the PSAR and everything. It came almost back to my entry before it resumed.
And so now what you add to that is the idea of a trailing stop off the maximum favorable excursion.
Right.
Which allows you to, that's like a form of sniper, which now on positive gaps allows you to experience that big gap up, and then in that first in the second bar, which reversed, somewhere in there you get an exit, which gets you even more of the sniper. And so the sniper exit from the maximum favorable excursion is nothing more than a sniper entry going short. So the same
Right.
logic is usually, I like to think of that as like two MMRBs. That's a safe.
Okay.
That's a safe number, and then that gives you some wiggle room.
Okay. So I put this one in here. Half of my trades look just like this. They just don't work. So exactly the same type entry. I accept that I can't watch them closely all day. I can't manage them as precisely as I would like. So I recognize there were a couple of improvements on this chart, but I got what I got, which was a minus 0.4R result, because at some point in the day I was able to look at the trade, and this is where I felt like I could safely get my stop without choking the trade out, and then that's where it closed. So I have a whole lot of trades that look just like that. And so many of them fail that I've really resonated with the trader's song or lyric that I wrote that was inspired by Jocko Willink. And I just say, good, let's go find another one. You know, we know they're not all going to work. So that's just one loser that we got out of the way. Now we can go find another trade. And some of them do work. So this is this current week. And this is me trading fairly aggressively in the first hour of the day, and then attempting to leave half the trade on for greater gains. So the first, also, I've been working on having the appropriate size MMRB. So I tried in the beginning, several hundred trades ago, to just use the R10 all the time. I find that pretty hard to manage for me sometimes, especially on opening range volatility. Then I went too far the other way to where I was making them too big, but I try to use an appropriate stop for the time frame that I'm trading, and I'm getting better in that regime. But it's usually not as small as the R10. Sometimes it is, but it's usually somewhere between the R6 and the R10, and it's usually a round number like 10 cents or 20 cents. Seems to work for me. I can do the math a little easier. So this trade was fine, but the second, and I was able to manage it really well, even though I was in the car driving to work. I got out on the second half, so it's kind of two sniper exits, but I got what I got. Pretty happy with that. Similar stories here. And as a side note here, I think I heard Ken's brother Bill talk about just put the trade number in the box. So that was just an improvement on my record keeping, thanks to Bill, because I was putting the trade number up in the top corner. So this is actually 2 days of trading. So on Tuesday, I entered this trade, took the sniper exit, and I had, based on the previous trades, I wanted to leave my stop far enough back so that while I was working, it had a chance to work. And you can see that on this trade, that was not the greatest idea. I got out where I got out, but it was still a good exit. The stats in the box here are actually for the second trade. So during the day, during lunchtime, actually, I had my phone propped up and I was watching this trade. Saw the SSC, took it, held it overnight, and it gapped up, took the sniper exit. And then I was actually able, this happened early enough in the morning that I was actually able to manage this trade a little better, got out at the Bollinger Band 30. So that's my attempt to do the Uwe exit. Out of all the trades this week, this is the one that's perplexed me quite a bit. So the question is, C202 short, collapsing dragon, or OR5? And everything in the market was rallying except for gold and gold miners, and they had sold off. And there was an SSC that failed. It gapped down, and I really wanted to just get short right on the opening bar with a stop up above this high, but part of me wanted to wait for the OR5. And so while I was having this internal dialogue, I ended up getting a late entry, which moved. I kept the same size MMRB, but that moved it down quite a lot. And I put the trade on. My stop was sitting in the market, went to work, almost got stopped out during briefing, but as soon as I had a chance to look at it, I see, well, I've got another chance to manage this trade better. And it should be failing right now. If I'm right, this should be failing, but it's consolidating. So I got my stop down as low as I could without just exiting the trade. Ended up with a plus 1.5. But a question for you, Ken, is technically, is there anything wrong? I won't usually sell an opening range bar that's rallying hard against the position that I want to take. But as soon as I see it roll over, is there anything wrong with just taking the collapsing dragon pattern, putting the stop up here and letting it play out?
I do that all the time. It's supposed to work. It stopped working, and if you look at you have if you start all the way over on the left hand side, the maximum peak of that thing, the peak of the R10, and then a lower high, and it rolls over. So you're collapsing dragon north of that purple line after the big gap down and it starts failing. As soon as it rejects at the dragon, right where stop right around in there. Any entry, any entry from between there and the purple line, I do that all the time. And as soon as I feel the urge, as soon as it rolls over in that third bar, that's the first bar was a big run up, gap down, and it went screaming north. Then it gives you that little cross. It opened, it sold off, came up, and then started to fail. As soon as that third bar starts failing, right there is where I crush it. And I call that's just a pocket entry, rejection of the dragon. I've got a kata 2 to the downside, and it gets confirmed somewhere around where that purple line is when it breaks through the collapsing dragon. Go just a little bit lower. Up, stop. Go down, go south. And snap right there. That's a collapsing dragon from the belly of the RL10 PSAR flip. So that's where I would get in if I was waiting for a collapsing dragon. Getting short, go back one bar.
Yeah, right here.
Yeah, stop right in there. And go north to the dotted line. Stop. That's where I like to enter as a it broke below the low of that, or the close of that second bar, which is a doji. And and the dragon is rolled over and the R10 is through it. That's an owl entry short. The dragon slope has turned. Go north. See where the PSAR and the edge, the northern skin of the dragon? The slope of the dragon is down. The PSAR is already flipped and we're four dots into it. That's an owl entry in the pocket before the collapsing dragon. And then you just put your stop at the PSAR flip. Go north.
Right.
And then I just make that box. I entered wherever I entered. I'm never going to take a loss worse than that. So I enter where I enter with the owl, and I put the box at the top of that PSAR and just say, that's my one execution risk, so be it.
Right. Perfect.
Yeah. And you'll notice that's actually wider than the PSAR box itself.
Right. But my wrist box would have covered all of that.
With ease. At that point, you just hold your nose. We've been calling that the hold our nose entry. Because
and I noticed what you did, Right. If this thing is going to go, it should have gone in the first two bars. It should have at least got back to the prior close, and it didn't. Yep. So this collapsing dragon pattern is the active pattern. The PSAR is flipped. So I was thinking just get in, but I hesitated and thought about it, and the result would have been the same, except I probably would have got a no lose plus dinner for two. And I wouldn't have been in this trade through all this. I would have been
and waiting for where you did there's nothing wrong with that either, because if you drop a range stat from there, where you expect it to go to when it fails is go back to Monday's low, or Monday's go north, go to Monday's close. You see that that is such a strong resistance level. That's also the fair value. And the move on Tuesday was the irrational move to the upside. Yeah, that's the irrational move that it could not hold. And now look how hard the buyers, they kept trying, but the sellers were persistent. Yeah. When that resistance collapses, it's going to fail back to Monday's close.
Right.
Which is, right in there. So when you take your short position where you did, there's still a 2-to-1 move. And if that resistance fails, it goes back to Monday's low. Go
Right.
all the way back to Monday's low, which was near the open. That's the
Yeah.
second price target. So if your entry works, it should work fast to get to Monday's close. And then if it continues to fail through that resistance, it'll fail to Monday's opening and the low of the day and the PSAR flip. So you got two reasonable price targets to the downside.
Right.
So your entry is fine, and the finesse of getting it in the pocket versus where you got it is trivial if that thing works in a huge way. But
Right.
we just say we don't know how far it goes. The sooner I can get in and just discover and get that out of the way, and as long as my risk box is at the top of the PSAR on the opening on Wednesday, go to the PSAR flip on Wednesday. As long as my stop is there, it doesn't really matter where I entered in there. It doesn't
Right.
really matter because the big payoff comes from the collapse of support from Monday's close. If that
Right.
collapses, the movement to Monday's close is a tactical move. If Monday's close fails, then it's a huge move down to Monday's open. And that's where you
Right.
get the large multiple return. So I just would rather let me just get in and let me trust my fireman to minimize the consequences of my impulsive decision. You know?
Right. Well, I just realized on this trade, I should have been in on the break of the OR5.
There you are.
That's where my entry
Yeah,
is. So I was
maybe,
a little
two
late.
bar. Yeah, so that's a trivial, in the great big scheme of things, that's a small piece of wood. That was a
Right.
learning point. But yeah,
But I was also thinking the more professional entry would be at, like you said, the belly of the dragon. If this thing is going to go north, it should be on its way. And if it's failing, I need to be short from here
yeah,
and not
right in
worry
there.
about all this stuff and just put your stop up there and
Yeah.
it's just be easier to do.
So if you look at the first, now zoom way in on the first three bars of Wednesday.
Yeah, that's the
So here's the psychology of that. Big gap down, harsh sell off, immediate reversal, big candle up. Awesome. It's going to work. That's the morning hook. All right, so just wait a minute. It opens, it moves up briefly. Or maybe it probably sells off right away. And then it closes with that doji. That is a indecision. The shift in psychology from bar 1 to bar 2 could not be greater. Bar 1 was a large directional move in both directions. Inside bar 1, the bears had their chance with the big gap and the harsh sell-off. And then the bulls had their chance with the great big run-up, and then it stopped. So the OR5 establishes the maximum emotional excursion, the MEE, of the bulls and the bears. So that's why that boundary is interesting. Now, bar 2 turned out to be a doji. It opened and it closed where it opened without making any new headway to the north. Below a declining dragon. Fine. Third bar opens where it closed and now starts decisively moving down. Got it. Anywhere in bar 3 is a sniper entry. And any entry in bar 3, your stop is at the PSAR flip. That's the size of your execution risk because that red line says no matter where I entered in that decline, only a price move above the peak of the RL10 100% invalidates the hypothesis. So the execution risk starts from the red line that you draw right where your mouse is, and then your entry is anywhere you decide to enter for any reason at all. Pick one. Coin flip. Don't care. The red line right there is the one that establishes the anchor to the execution risk. And then on the positive side, you have Tuesday's open, which was Monday's close, as the downside, because that's a rejection of all of Tuesday's abnormal upside move. The short side trade is justified because you have a COTA 2 to the downside. You saw the peak of Tuesday's move, a double top actually. Just looking at the RL10, go to the left. That double peak is the maximum emotional favorable excursion of the irrational move to the upside. Then it has a decay all the way to Tuesday's low. PSAR flips. Now the bulls try their little kata 2. You get a double top, and it got only a third of the way up the stack. So it's already running out of steam. No new real buyers came in to support it. The first mouse came in and tried it. And then when that collapses, anywhere between the peak of the PSAR flip to the purple line is an anticipation of the collapsing dragon of the low on Tuesday. And any entry, start going to the right and down. Follow the blue line. So any entry in there, stop. That where you are right now is the collapsing dragon off of Tuesday's RL10. That's the collapsing dragon in there. So you draw that line across. See, any break of that line. Look how notice the R10 wiggle? Right there. It tried one little brief moment to run it up. It couldn't even penetrate the dragon and then collapsed immediately. That is such a perfect entry there. It's also the collapsing dragon. So you can wait for the collapsing dragon off of Tuesday's low. And now you got about 10 bar or 6 bars earlier entry than what you got. But even your entry, what you got is fine. There's no doubt that thing is collapsing. And you have a wide enough stop, and you chose the appropriate, hey, I'm just going to pick the PSAR box instead of the original PSAR flip. I just take the PSAR where it is, I call it even, and let's go. If it fails, it'll fail to Monday's close or Monday's open for a big win. And those justify taking that risk. So now draw a line across that. Monday's close is that great big, go back to Monday's close at the end of that. That's a sideways quiet channel forever. That was what they really thought fair value was. Everybody got surprised by the Tuesday run. So if Tuesday's run turns out to be a failure, it should go back to Monday's fair value, which was the close. But
right at 32.
Yeah, but if that fails at 32, the next logical place that it turned was 31.6, which was where the turning point on Monday morning was at the RL10. That's the next lower level where the R10 decisively turned, which, by the way, was a turning point on Monday and allowed a trade off the bottom, by the way. You just anchor the move to the bottom of the RL10 and give it how far up the stack do you want to go? Okay, 1, 2, 3. Fine. Or put the MMRB anchored to the bottom of the RL10 and just take it. Hold your nose and see what happens. So that's how you start using these little carpenter's forms and norms, these little trade frame boxes. That's why the power of the MMRB is so darn important, because it lets you know how far off the bottom. What if you had been short on Friday? Now think about that. What if you'd been short on Friday and now suddenly you get that gap down and now you see it start to reverse? Where's the sniper exit on that short? The 1, 2, 3. Go south. Now go to the 1, 2, right there. That's where you would have exited the short from Friday, because it was you gave it room to fail and it didn't. The sniper exit on the short is the sniper exit on the long. Now go north and see where it crossed that. Go north, 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 and stop. That's where the structured PSAR flip entry is, and your stop is the bottom of the PSAR flip, which is where the R10 turned. When it flips, It flips when the R10 goes through the PSAR dot. But you know where it's going to flip to because you saw the peak of the R10 of the RL10 on the bottom. That's where mathematically it has to flip to because we're using the RL10 price to tell it when to flip. So when the RL10 goes through the PSAR on the upside, that triggers the PSAR flip to the downside. So you know before it flips where it's going to flip to. So you can anchor the bottom of your risk box to that. And if you know what your R6 or 2 times your R10 is, you can just put that thing in there, just hold your nose. And when you're trading something that you're used to, pretty soon you say, well, I'm not going to take more than a 20-cent loss on this thing anyway. That's my box.
Right.
And then you slap that form on there, you buy it, and then you manage till you get to no lose plus dinner for 2. Then you've successfully escaped the rapids because your fireman saved you. That's why the move to no lose plus dinner for 2 is the great savior. Think of the father and son with the lifesaver, that commercial.
Yeah.
That's who the fireman is. It's the father in the lifesaver commercial. So go find a good picture of the father and son walking into the sunset with the lifesaver at the bottom. That's who your fireman is, protecting you against the impulses of youth. You've given the kid a 22 and some live ammo, and we're going to go hunt rabbits safely. Or you gave him a dull penknife to start learning how to whittle so he won't cut off his own thumb. But that lifesaver, the guy who made that decision is your father or your uncle who gave you the tool that's going to lead to a lifetime of craftsmanship, whether it was a rifle or a penknife for carving or a model airplane for flying. And he's teaching you the habits of mind at a young age. Get my risk out. No lose plus dinner for 2. Get my risk out. And then let's just see what happens. That is the most freeing style of trading that opens you to the possibility of fat right tails, which can go forever. Let the universe worry about the fat right tails. That is going to be a function of the emotions of the bulls versus the emotion of the bears and the amount of money that each one happens. And it can only go in your favor because you got your risk out by taking the first reasonable, careful entry that protects you against disaster. And then the fireman, your uncle or your father, protects you against loss with the lifesaver. And that's what the no lose plus dinner for 2 was. Now, in a perfect world, on your trade as drawn, notice your entry and then where the RL10 reverses and stop. Edge of the dragon, lifesaver, done. It was supposed to fail right away. It had 6 bars and it didn't. You lock in the exit right there. And now later, your trailing stop worked just fine and your wide yellow box worked just fine. It allowed you to get the same exit after giving it a second chance to fail, but never taking more than the acceptable risk of the yellow box. So that's not a bad trade. The yellow box did what it did. It defined a noise area and said, if this thing is going to work, it's going to fail all the way down to Monday's close or Monday's open. And I'm going to give it a wide enough stop and I'm going to accept what it is. And it turned out to give you the same exit that you had on the first, which is the first entry. The first exit is what you'd have taken if you'd have been there managing the trade anyway. The trailing stop allowed you to get a mechanical exit later. And then you would have re-entered and reversed and you get out. And the second one, if you re-enter on the second PSAR flip, go east, short right there, you'd have been short there all day. And then you would have gotten an exit at the touching of the dragon. So you get the same exit anyway. It'll just been 2 iterations with 2 positive fractions. So the
All right.
point.
So yeah,
Yeah. Go ahead.
go ahead.
Yeah, I
After
just
all,
want.
out of all the trades I took this entire month, this is the one I've studied the most, because most of them either work or they don't. And I remember the sense of relief. I didn't even know what was happening with this trade. I put it on and I thought, this thing has a chance to work. And this is because of my late entry. This is where my risk box is. That's the part I wasn't happy with. But when I looked at it, when I got a chance to look at it, it felt like a free gift. I'm going to give you one more chance to do this right. So,
Right. So what that was, there were two different parts of your team in play. The first
right,
guy that helped you was the designer or the craftsman who gave you the form which said the yellow box will prevent disaster. That historically has been an acceptable level of risk. It's the same size of the box. If you'd gotten the perfect entry earlier, where we said the
right,
collapsing dragon was, it would have been the same size box. So it's still the same size box. And because you have a reasonable expectation of getting a multiple of that, that's the safe box. So it did what it did. The fireman is the guy who gets you affirmatively to the green box. So the designer, the draftsman, the trade architect, the guy who set it up, the architect, gave you the scientific structural framework of that trade. The fireman is the other guy in your team who gets your risk out quick. Two different parts of your team, but you got both of those uncles giving you the safe, proper professional guidance. That's what I want to say about that. That's why, and then if you go back, replay this discussion many times, and now how to think about the sniper entry Monday morning.
right,
All you got to do is figure out, well, what if I'd been short Friday? Where would I take the exit? A 1, 2, 3.
right,
A minimum manageable risk box off the bottom. I'd have been happy with that short trade, which means that the teeter-totter tipped to say now suddenly the potential upside move was greater than the continuation of the downside move. The minimum manageable risk box that goes in there says, look, I don't know whether it's going to reverse and go all the way or it's going to just pause and then fail. So you set up a bi-directional trade. Go back to Monday morning open. So the gap down and sell-off was a continuation of Friday's closing swing trade to the downside. So you go up north to Friday's close. What if I decided to be short there with an MMRB to the PSAR? And now suddenly, much to my surprise, I get a 2R move to the downside. And now it starts reversing and stop. 1, 2, 3 exit. Now suddenly, I'm no longer interested in hanging on to see if it'll fail because it had 3 bars to fail further and it didn't. So I cashed that one with great happiness. What that means was my intuition said that the possibility of the upside move was now at least as great as the possibility of a downside move. So I can actually just enter with an MMRB down to where I already saw where the R10 peaked. Right there. At the moment of the 1, 2, 3, I see the bottom of the R10. That's where the PSAR is going to flip to whenever the R10 goes through the PSAR, which is not for 4 more bars. But I know where that red line's going to be because the bottom of the R10, look how nicely the dotted lines connect the dotted lines right to where the PSAR paints. Mathematically, it must do that. That's why we make the R10 the data source, or the RL10, we make the RL10 the data source for the PSAR. We use the RL10 as the price to decide when the PSAR flips and to where. So you know where that's going to be. And that's also that red line between the bottom of the RL10 and the PSAR. That's the trigger line for the collapsing dragon, which would have been the start of the 3rd leg of your intraday short on Wednesday.
right. Yeah, the main thing that disturbed me was looking at waiting for more evidence and thinking about this and that. That was the cost of that. That's kind of what I thought.
Yeah.
My stop could have just been here. I could have just entered at the appropriate price level and not worried about anything. It either works or it doesn't. But this caused a lot of
that's the
it wasn't
cost of
anxiety.
certainty. It's the
Yeah.
cost of waiting for certain. Here's the mindset on that. How far that trade's going to go has nothing to do with where you entered, because you are one little drop of water in that waterfall. How far that trade is going to go is a function of something you don't know, and that is how many sellers with how much money versus how many buyers with how much money. When they get exhausted and they've played all their cards and chips, wherever that ends up is how far it's going to go. So the longer that you wait does not improve the information about how far it's going to go, because how far it's going to go has been predetermined based on how many guys are buying and selling and how much money. And the further it goes, the more sellers are going to come in. Oh, but the further it goes, the more buyers are going to come in. So you can't ever know that. The longer you wait to get in, once you get past an MMRB, the longer you wait to get in can only reduce your reward.
Right.
It does not.
Yeah, I came to that.
Yeah.
I came to that realization by studying this chart, that all the indecision just cost me. It's the same exact risk, but it would have been a better risk to take it early and decisively, and then just take the result.
And guess what? As a good Catholic boy, the sooner I get in and I'm wrong, the sooner I get to be wrong and then be on the long side.
Right.
With a fractional R loss.
Right. So that led to this trade, which was my last. I had 2 losing trades after this on Friday. This was me trying to put it all together, and this was Tesla the day after earnings. I had actually emailed my setups to Luke. I had 2. One was in U.S. Steel. It stopped out immediately for -1R, and this trade actually worked. But again, the volatility was insane, and it looks like a very tiny risk box. That's a $2 risk box, so that's almost the R6 on a 5-minute chart. So I watched this very closely, and I was actually watching it on a 3-minute chart at entry. But I've been managing my winners after my exit on the 5-minute chart. So that's why I printed it out. Plus, it was just so huge, it had to be printed on a larger chart. But anyway, just like Ken said, I saw the OR5 trigger to the short side, immediately retraced about halfway. So I was watching it with interest. I thought the top of this bar was an important level, so I just hung my MMRB off the top of this bar, which is where it started failing, and just got in at $2 below this bar's high.
I want you to notice, if you went back to the previous trade, that's exactly the same pattern for entry that we just talked through on the other one.
Right.
That failure to follow through is information, and the sniper entry. Carry on.
Right. And I just realized because I studied the other trade, I just realized if you're going to do it now. Don't wait, because it's just going to cost you. So this trade actually happened to work during my early morning trading session. So I exited. I noticed that I went to more than 2R, and I'm trailing my stop. My stop is up here at probably 0.6, 0.7, maybe 1R even. But it went better, like to 2.4R, and then it retraced to like 1.5R. And then I'm having to make a decision because I'm not going to be able to monitor this trade. So when I got a chance when it came down to greater than 2R win, I just moved my stop to 2R, and I got stopped out there for half the trade. So half the trade was still on. Traveled to work, went to my briefings. The next time I got a chance to look at it, the remaining half was at plus 3.3R, and it was pushing back into the dragon. It looked like it had found support here. So I just took that off. I was very happy with that. So this left 1/4 of the trade left that I had told Luke I was going to manage with his Aussie PSAR. And at 9:45, I thought I had him. I was pretty happy with my trade here and my 2 exits. And then, of course, it never triggered the whole entire day. So I exited on the last bar of the day, end of day. And if you notice, Tesla gas, it closed the prior day above the prior week's high. And including the gap down, it actually traded through the entire range of the prior week to close at about a weekly ATR. That was a huge move for Tesla.
Yeah. Now I want you to notice 10:15 and then go north.
Oh, I saw that.
Yeah,
but
yeah.
I realized I had my.
No,
I
go
was gonna
east.
go
Go
all,
east. Go east. Yeah.
Yeah.
10:15. Notice where the R10 crosses the dragon. Now that's it. So go east one more bar. That bar is the earliest reasonable re-entry. Now go to the previous belly of the RL10, just below where it says 3.3. That dotted line, go east to where it touches the R10. No, go east, 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 east. Right, stop. Where that's the latest perfect re-entry to the downside. Now look at you get 2.5 of those boxes captured. So even if you had taken the other trays off, and you start taking pieces off, think pieces off, pieces on.
Yeah.
Fat kids on teeter-totters. So the earliest is when the RL10 crosses the dragon. That's the RLXD, bingo. And then 2 more bars to the east is the collapsing dragon. Look how strong the collapsing dragon at 270 is. First of all, it's a round number. Now go west. Look at every place. Look at every place where the two stop.
Yeah.
That is the 270. It held. Go east. Go west again, all the way to the first belly of the RL10. Right there, 270. It's like a big finger pointing at that price level, which is where the PSAR will flip someday. So if you
Right.
270 is crucial. So you take your tactical exits as you do, but now it failed to reverse, and now it's failing. Any exit around between 270 and the belly of the dragon is a pocket entry, and then a short at 270 is technically a collapsing dragon, and that move takes you from 270 to 265. $2.5. That's $5.50 on a $2 risk. So that's a two, and that thing never looked back. That's a 2.5-hour trade, and then you can have that set as an alert when the RL10 breaks below the previous RL10. Bingo.
Right. So on this bar right here, prior to that, when this minor support broke and the RLXD happened, I was going to go all back in because I could hang my $2 risk box right off of here and just enter.
Yeah, and you get 3R of markets money, and if you make that decision, you just acknowledge, I'm not risking my core capital. I've decided to invest markets money and use my chip stack in the favor of the big move of the day, and that's already a 7% sell-off in Tesla. And then when you do that, if you scale that chart to ignore the gap, now suddenly you can see the real in TC2000 when you do that, it makes that whole thing look much larger, and your visual cortex.
It'll fill the whole screen. You'll see the magnitude of the move.
And your visual cortex will help you get out of your way.
Right. But the only reason I didn't do this, Ken, is it wasn't the plan for this trade this day. And I had my hand on the trigger just about to push it. Yeah. But 2 reasons that I didn't plan to do that is I know that I cannot properly manage that trade during this afternoon time period.
Right.
And that's why I'm doing the Uwe exit. So I was really wanting to do what you described, but I pulled back and actually followed my plan, which was kind of a win for me.
Yeah. The good news is that this only happens to Tesla one day out of 100 or 200, and your trading plan protects you on the 99 or 199 days when it doesn't do that.
Right.
And if you look at that, that was more than a range stat move. for Tesla.
Yeah.
So we already know that it's craziness anyhow. Your trading plan, your conservative trading plan, and the UA exit protects you against the disaster.
Yeah.
And
And the,
snipers allow you to take low risk shots when the buffalo are running.
Well, if you guys go back and look at the prior charts, I like the sniper exit. This was the only time in this whole month. Well, there was a couple of swing trades early on, but taking the piece off and then getting an improvement on my average R capture with the exits after that, and that was kind of a aha moment for me. Is like you said, when you get this first half off, you finance your risk, so don't trail your stop up too tight, and you have the opportunity to catch these larger moves.
Sniper 1 and Sniper 2.
Yeah. So now I need to work on the PSAR flip exit. Just trust in the PSAR.
Yeah.
On that last piece. This kind of leads into the last thing I have, which is struggling with my trading plan. So I have a really nice trading plan. If I showed it to you, you'd say, yeah, he worked on this and it's great. The problem is I don't believe in it. It's not my real plan. I do believe in the components. I believe in the PSAR. I believe in the entries and exits. But so I've thought about that for this whole week. And my work in progress for next week is to rewrite my trading plan so that it's my actual plan. But I realized I don't believe in plans, because in my business, we never bet anything on a single plan, because it always surprises us when any of them work. It's just a plan that we made up anyway. What we do is, and I've been noticing this every day as we go fight fires, we hedge our bets and we make more than one plan. And usually we end up cycling through the first three. One of those will usually work because we are pretty decent planners after all. And if that doesn't work, we adapt one of the first three to create three more plans. And it's pretty rare that we have to activate our emergency plan, but that's probably the most important plan we have, because that means everything has gone wrong and now we need to do damage control and reassess. So in our business, we use this PACE for planning. It's just a quick acronym to make sure that we've covered our bases. So we always have a primary plan, an alternate, a contingency, and then the emergency plan. We don't just go through them in order and activate the emergency plan. We actually recycle these first three, especially the first two, just modify them slightly and try again. But
think of that as Z1, Z2, and Z3. We use exactly that same acronym in our planning for contingencies and emergencies in the military ops. So,
yeah, that's probably where it came from. Yeah, that's probably where we got it from.
I think it worked out together in. We didn't see that come into our language until we started doing these much more civil military planning for like homeland defense and support to firefighters. And I think the language you guys used came in and we saw the utility of it. And then I think it got hammered out in like homeland defense and FEMA, the collaborative planning that we've done there.
Yeah, we all use the incident command system.
Yeah.
So that it's all the same, no matter whether it's a fire or an earthquake or any emergency response. So that was probably a collaboration with the military. But I put our little fire triangle here because this is the world we live in. A fire needs all three of these to exist. And all you got to do is kick one leg out and there's no more fire.
So add a diagram there, the time, will, pattern, money.
Right, time, will, pattern, money. I need to just switch that around.
No, keep oxygen, heat, and fuel the same way.
Okay.
But
just
right next to that, put next to it, cut, paste, clone that, and then figure out how the words time, will, pattern, and money fit into that. And I think that you will see that the will, because there's four things in there.
Right.
You have maybe it's a square, I don't know, but that really represents. I only have a trade if I have all four of those things:
right.
Time, will, pattern, and money, and three of them are well known. Right, time and mathematically pure, time, pattern, and money. That's yes or no. But the will of the That's why for me, the fire is the will, the spirit. The
Right.
other ones, you either have oxygen or you don't. You either have
Yeah.
heat or you don't, a spark. And you either have fuel or you don't. So fuel represents money, you know.
Right.
But the image you can figure out how far that goes. But time, will, pattern, and money is the same idea. You got to have all of them to have a trade, and you need all of those to have a fire. So there's probably the inside of that thing is the spark that triggers all those things, and for me, that's the same as
Right.
the will. So if you put a W inside that, or an S for a spark, that would be the W of will.
Right.
Same thing. Go.
Yeah. If you look back at everything I talked about today, it's always the will that wavers. You know, the pattern was already that trade that I studied so much. That's a perfect example. The pattern was there from the opening print. It was just sitting there ready to be taken, but it took a long time for me to decide to take it.
Yeah,
and that was what I wanted to reduce.
So the other thing I'd like you to add in there is the picture of the father and son with the lifesaver walking into the sunset. And I want you to recognize that the young boy is the will.
Right.
That naive curiosity and imagination and possibility, that unfettered spirit that we got to protect with a protective wrapper of all the things that you show them. That's what uncles and fathers do. And the Enzo, yeah. The Enzo is the protective wrapper where the father and son, the uncle and the boy, the aunt and the nephew are doing all that preparation, and the gate to the Enzo is the gate to the rest of the wide world. That safety, trust, truth is in the Enzo itself. The opportunity is the gate in which raw materials come in and opportunities go out.
Right. Yeah, I was flying, actually just ferrying to a fire or back from it, one of the two. But I saw this. This is actually a farmer. You can see his machine right there. He's cutting his hayfield.
Yeah.
And this didn't exist but for about 15 minutes, because after about 3 more rounds, it was gone. But I realized what you said. Like, I've drawn a bunch of Enzos. I don't want the circle to be completely closed, because I want to let things out into the world and I want to let new things in. So that was
think about that as a turtle shell from the top side. The turtle shell protects from the top, but he has those holes where his head, because you got to be able to sense the world outside you. But the opening of the Enzo is smaller than the jaws of the dragon or the tiger or their paws, but it's open enough that the turtle can see. And anything that is small enough to come into the Enzo's opening, that snapping turtle will bite that sucker off. So he's ready to counter it. Or that's the badger's lair. And the face of the badger is to the opening of the Enzo with all his sensory organs: eyes, ears, nose, tongue, and his jaws. That's the badger is waiting for you to put your hand into that hole. That's why it's there.
Thank you for that. Yeah. So as far as my plan goes, I finally got really honest about, what is my plan? My plan is just to keep trading and do the best I can. That has to be the spirit of that has to be in my written trading plan. And I also have decided completely that trading is just another game that I choose to play. So I'm serious about it, but I want to enjoy the process. I don't want it to be something I dread. We talked about the stopped out mantra.
Yeah, just remember 3 billion heartbeats. The ones that you spend on trading should be the best thing that you can think of doing at the time, for all the payoffs that it gives you, some of which are dollars, which allow you to do other things. Some of it is just the sheer joy of doing a professional job well and an artistic job beautifully.
Right.
So don't underestimate the tangible intangibles,
Right. Yeah, that kind of leads into the why I trade. So I love to trade, but I'd been putting so much pressure and criticism on myself that it was just draining the joy out of it. So I have to keep that in the spirit of my trading plan and in my processes and systems. I want to enjoy doing this for a long time. And the primary motivation was that I am serious about developing my trader skills. But right now, this is costing me about 2 hours of sleep a day. If I didn't get up and trade in the morning, I could actually probably sleep at least an hour, maybe 2 hours or more. So I needed one more reason. And I've noticed that in my life when I have to make a lot of decisions, you weigh the pros and cons, and sometimes it comes down to one single thing. If I have one more reason to do one thing or another. So I came up with this idea to provide a motive force to actually just keep doing this work through the summer, to donate some money to the soccer kids. And I did that, and that's been good for me. I didn't literally take it out of my trading account, but the idea works. My work in progress going forward is just keep doing what I'm doing, practicing and gathering data on these two-way exits and rewrite my trading plan. And aho.
How good was that?
I think that's the longest I've ever talked.
Well, I took half the time too, but you know,
and
so I'm not supposed to. And you know, I'm using a modified trading plan for my coaching of the True Story Circle, which is supposed to listen without judging. Okay, so apologies. I'm sorry for doing that. Sorry, not sorry. So that's part of the modified agreements that we make, that if at some point some of us see a good enough reason to risk talking about it, that we do that. But it was with the spirit of ensemble storytelling is what we just did, which I just semi invented. And that is when, like a barbershop quartet, that the song is more than just one. So there's I'm going to start working on that idea with Boji about live storytelling ensemble. He has a thing called ensemble leadership, but I'm going to invite him to think about ensemble storytelling, which is when both or all of the members of the choir are improvising together, but within the same notion, and are really paying attention to the music. And so now you can do collaborative, creative storytelling in the moment, in which we are playing off of each other and creating new things, but without judging. And so what I was doing was telling my story with insights, not telling you what to do, but just to notice different parts of your story in the telling while the iron is hot. That's us carefully hitting that hot ingot of steel with each of our hammers. Or maybe you're the steel with the heat, and then I hit it, and then you hit it, and we put it in the fire and think about it and next thing. So we're actually creating some ensemble true storytelling that doesn't violate the principles of true storytelling. So I think I just created an addition or an extension to what he's been teaching. So I got to check with him to see what his thoughts are. But I already sort of know that that's correct. So there we are. So let me hit the circle, or let me hit the tones. I'm going to invite you to think about the word that comes to mind for the week ahead, including you, Greg. And thanks for being a silent witness to what we're doing. And that makes the circle complete. If you're not here, it's a different story. So here we go. Greg, your word for the week ahead.
Bite size.
Ernie.
Tranquility.
Yeah, listen to how long it takes for each tone, now that they're not being played in succession. Listen to how long that thing persists. Jeff.
Sure.
So I think probably as a drummer, I would say probably the perfect cycle would be for me to count off as I hit it, then count off the measures till I no longer hear it, and then wait an additional amount of silence time before the next tone. That would probably be a perfect yin yang cycle of sound and no sound. I don't know. Just thinking. And what was your word again?
Trigger.
Trigger. Chunlong.
Non-resistance.
Power tools. I'm listening to my brother hacking away at the wall on the other side of the nearly soundproof wall. The longer we go, the less work I have to do. So, if I'm being honest, that's part of it. But I probably need to get over to help him. So, that's my power tools. This will move us out of the circle. I'm going to probably package different pieces and parts of that because there was a ton of lessons today. This is between the foundations and this one, maybe the best almost 3 hours ever. So no, it's 1 o'clock. We started at 9. 4 hours? Holy smokes! Time really is fungible and non-linear. There we go. Well done, fellas. I've decided I'm going to package those two as one standalone course, probably for $47, and just say, guys, just listen to this pay $47. Listen to this 4-hour live concert, and you'll be glad you did. If you're a trader, that's what I'm going to do, and we'll donate that to the soccer team because we all did some pretty good hard work with that, with your permission. So that's what we're going to do. You guys have a good rest of the day, and I'm going to get over and start attacking that wall. Ciao for now.
Thanks, guys.
Thank you. Bye-bye.